Good evening, everyone. Welcome to the channel. Today I am going to talk about Yihai Intl, interim report. Do note that this is not a financial advice or a buy or sell call. All content are AI generated and is not associated with anyone. Yihai International Holding Limited offers a diverse range of businesses and services, including production and sale of hot pot condiments, compound condiments, Chinese style and Western style, ready-to-eat food, products, hot pot soup flavorings and dipping sauces, self-serving small hot pots, instant vermicelli, instant meals, puffed foods, snacks, raw materials for trade, packaged goods. Sales. The company operates under two brands, Heidilao and Magic Cook. Yihai International Holding Limited, SHKG, 1579 stock price has increased by over 15.68% in the past year due to a combination of factors. The company's significant recovery from its 52-week low, positive half-year financial results, analyst upgrades, and optimism on dividend stability and margin discipline have all contributed to this increase. A key driver of the stock price growth is Yihai International's recovery from its 52-week low, with the company's stock price now 25.34% above its lowest point in September 2024. The release of half-year results for 2025 also reported a revenue of RMB 2,927.4 million and a slight rise in net income attributable to the parent company. Analyst upgrades from CICC, which raised Yihai International's target price to HKD 18 and upgraded its earnings forecast, further boosted investor confidence. The company's strong performance in key business segments, including a 131.7% year-on-year revenue increase in the B-end dining customer segment, also contributed to the positive sentiment. Overall, these factors have combined to drive Yihai International Holding Limited's stock price higher over the past year, with investors optimistic about the company's dividend stability and continued margin discipline. The primary drivers of revenue growth or decline can be summarized as follows. Revenue growth drivers: improved product research and development mechanism, refined channel management, optimized supply chain system. Business end segment revenue growth, 131.7% YoY, increase in residence income levels, overseas expansion and channel construction. Revenue decline drivers: discontinuation of certain products based on market feedbacks and sales performance, decreasing gross profit margin due to decreasing gross profit margin of related parties, an increase in proportion of revenue from products with low profit margin. Revenue from hot pot condiments products overall decreased by 3.7%. Related party sales revenue decreased by 12.7% year-on-year. Net income and profit margins. A decline in performance. The company's net income has experienced a decline of 1.4% and 1.5% over the past period, indicating a downward trend in its financial performance. Similarly, profit margins have also decreased, dropping from 30% to 29.5% and from 11.4% to 11.2%. This decline can be attributed to various factors affecting the company's operations and revenue streams. The reduction in net income and profit margins suggests a need for the company to reassess its strategies and make adjustments to improve its financial performance. The company is generating positive operating cash flow, indicating a strong financial position. The majority of its operations are funded by the cash generated from its own operations, with significant amounts of cash flowing in from both cash generated from operations and net cash generated from operating activities. This trend is expected to continue, as evidenced by the positive operating cash flow reported for 2025. The company's debt level and interest expenses have undergone significant changes in recent years. In terms of debt level, the group has maintained a consistent trend of having no external borrowings as at June 30, 2025, and December 31, 2024. However, there is an indication that total cash outflows for leases decreased by 10.1%, suggesting a possible reduction in debt. Regarding interest expenses, the company experienced a notable decrease from RMB 442,000 to RMB 83,000, representing a decline of 14.3%. This significant drop in interest expenses is a positive development for the company's financial health. The recent financial summary reveals a mixed performance across various segments and regions. On the positive side, catering and food product companies experienced a significant surge of 131.7% in sales revenue, indicating a strong demand for their services. In contrast, e-commerce channels struggled with a mere 0.3% increase in sales revenue. Geographically, northern China and southern China witnessed declines in revenue, with decreases of -1.2% and -0.8%, respectively. However, other markets bucked this trend, posting a notable 34.5% increase in revenue. These results suggest that while some sectors and regions are thriving, others continue to face challenges. Management's outlook on company strategy. The company's management has expressed its intention to pursue strategic investments to create synergies across different areas. This approach aims to drive growth and efficiency, positioning the company for long-term success. By seeking out opportunities that align with its goals, the company is committed to enhancing its overall performance and competitiveness in the market. The company has a history of paying dividends to its shareholders. Specifically, it distributed RMB 22,000 in 2025 and RMB 380,779 in 2024. However, there is no record of any share buyback or repurchase activities within the provided financial summaries. Concerns over inventory buildup emerge. The financial summary highlights a notable increase in inventory levels, raising concerns about potential issues. On page 27, it is reported that inventories rose from RMB 465.5 million to RMB 382.7 million. Furthermore, on page 76, the changes in finished goods inventories reveal a significant increase of plus 10,866,000 RMB in 2025, contrasting with a decrease of minus 18,601,000 RMB in 2024. These fluctuations suggest that inventory buildup may be a pressing concern, warranting further examination to mitigate potential risks. That concludes the financial summary for Yihai Intl. Feel free to comment below, and I will be happy to answer them when possible.